Oh, they're traders. Okay. Now, there's been some significant moves in, especially the major currency pairs this week, with the US dollar sort of really coming back into favor, right? And I just want to take you through the sweet art of technical analysis, right, to give you some sort of understanding of what's going on. Now, when you're looking at the hourly charts, right, you can see obviously the immediate action. You know, it's like you're going to driving down the street. You can see the traffic lights, see what the traffic's doing, but you don't know what's up ahead or if it's a big problem everywhere. So just looking at the charts, right, you can see obviously the dollar index. Okay, it's a good indication of what is going on. The dollar index has gone very hard. It's because the key components, euro, sterling, the yen, okay, then it sort of drops off into some peripheral pairs, are all moving, right? They are all contributing to that dollar move. Now, right now, this is where humans get in the way and where the live signals can come into play, but it's probably a little bit early for the signals to really pick up the move. Is looking at these things are breaking down. This is a massive clean out, right? And you can see that very clearly on the hourly charts. You can see the levels that's broken, the new resistance trend lines here at the bottom. Okay, euro, sterling, Aussie, Kiwi. You can see that red arrow. That is that's obviously the current market level. Right now, if you put a gun to my head, I'd say, yeah, I'm selling euro, sterling, Aussie, Kiwi on rallies back towards this level. It makes complete sense, right? If I take out my brain, you start thinking about things, and this is where new traders in particular really pay attention. Do not try and pick the bottoms here, okay? Even if they're oversold, it doesn't matter. If these things are trending down, do not try and get long looking for the move back up, right? That's it can occasionally happen, but then that's going to create bad habits. Don't try and pick the bottom. Don't try and pick the top, right? That's the key to the whole situation here, right? So now, where are the answers? The answers are on the daily charts, right? And you look at the daily charts, to me, this is just a little bit of a flush out, right? It's not like the overall trend has collapsed, right? If you're looking at the bull bear pivot line that I use, okay, it's still, these instruments are still above those levels, right? And on the dollar pairs at the top, it is still below those levels. Although dollar yen, the beast, right? Just be aware, this thing does its own thing. It's different to everything else. So I don't think dollar yen is your friend. We can make some money out of it occasionally, and it's big points. And when it trends, it trends. When it doesn't, it'll sort of turn around and bite you. So we do have some levels here, right? So the trend isn't over yet, as in the dollar downtrend, but we are seeing a significant flush out. Friday's US non-farm payrolls. I tell you what, that's like as I said on the in the Discord, it's like a UFC bout, right? A championship fight, blood everywhere. It's a mess, right? These markets where technical levels have been chopped up a bit, it's going to be haphazard. Now, sort of just having a look. I'll come back and explain what these coloured pinpoints are on euro. But just at the moment, right? We had we have had, right, and this is one of the reasons why everyone's a little bit confused with what's going on. We've had really nice trends in Europe, right? Euro and sterling, and we have seen these two break down, right? And it wasn't like 2 weeks ago you couldn't get enough, you couldn't buy enough sterling. It was just going up and up and up, and then all of a sudden, boom, they've done the EU US tariff deal, and all of a sudden that's the bell rings, and it's like, okay, all the issues surrounding the tariffs apparently has gone. Well, it hasn't actually gone, but it doesn't look as bad as it was originally. Now, but these two pairs here that I've got circled, right? You've got euro and sterling, really good technical setups. You can see exactly what's going on. What is a basket case? And this is what you need to sort of see, right? Aussie. Okay, we had CPI numbers out yesterday, slightly weaker. Did you get onto that? I was sort of looking at it going, it should be lower. Didn't really sort of make sense. Now it's here, but you look at Aussie and Kiwi on a daily chart. These charts suck, right? They don't have the structure of euro, sterling and euro. Like you can see very clearly on those two charts exactly what's going on. You've got trend lines, support and resistance. You can see exactly what's going on. Here we've got some resistance levels, and that's about it, right? Ever since Liberation Day, it's been a little bit chaotic for those pairs. Now, on the top side, okay, the dollar index, yep, it's cruising top side. I tell you what, this is where I look at like what the dollar's doing, and dollar Swiss is a really good neutral benchmark of what is happening, right? So the dollar Swiss has been going down. We do have a resistance trend line here, you know, 270 points higher. It does look a little bit overdone, but this doesn't look as significant. Like the market has been very long euro and sterling, so that they deserve a flush out. But dollar Swiss, I'm not convinced dollar Swiss is going up, right? And then you look at the beast, right? And it is, as I said, just doing its own thing, mid range, room to go up, room to go down. I don't try and guess it. I was the head yen trader in Citibank London and New York for a number of years, 3 or 4 years. It took about 20 years off my life, right? This thing used to beat me up a lot. I got some money back out of it, but I tell you what, the yen actually probably dominated over that period of time. Now, dollar CAD is, I tell you what, when it trends, it has been trending really well. Now, the problem has been what oil's doing, right? And it's sort of all over the shop at the moment. So it's not really sort of correlating. You can see, if you're looking at the long-term trend, right, it's just a flush out. To me, it sort of looks like it as well. It looks a bit more like euro and sterling. It's gone a little bit further, but I just don't know what to expect there. Now, let me just come into euro, right? I've got okay, we've got a couple of good touches here. And then you see like this, if you're looking for confirmation that this trend line exists, you can see by the price action. It stalls at the trend line, flushes through, retests, and then goes, right? So this is, I believe in the trend line because of the way it's behaved, the price action has behaved. Now, what do we got here? Up here on that blue one, Liberation Day, 4th of April, right? So euro was at 109.30. Then over the course of the, it's 1st of July. So you got a couple of months there, April, May, June. So 3 months. And it tops out at 118.30. Then all of a sudden we get the deal and euro starts sort of really hammering to the downside, breaking down through this. Now, the theory that a lot of people are throwing around, and this is, you just sort of, you want to have some reason as to where things are going, because the dollar sentiment, the dollar US economy hasn't exactly like gone great, as in like everything's on again, it's all awesome. The Fed are just not cutting rates, right? Some of the other countries, well, they aren't either, but they've got to say like UK has got a very precarious economic situation at the moment. Now the target 109.30, so that's 900 points. We are at 114. So there's still 400 or 500 points here to go. If we are really looking at this is the correction back to where we were on Liberation Day, right? And that is maybe a potential target for us. So you're thinking, well, there's still something in this, right? This is where a bit of too much human subjectivity can sort of really come into play. I'm thinking, okay, I like to sort of see, and by all means, if you've got Metastock, just start using some of these things because it can remind you when you come back, and you might just say, you know what, this is a target that I'm looking at, right, and pin that on your charts. To do so, you would come up and hit this annotation thing here, the T, and then you can sort of choose what you want to sort of drop onto the chart, whether it's writing, flags, balloons. There's a whole range of different things you can put out there. So that's the potential, right? And I'm dropping those on the chart just to say, okay, listen, that is the potential level we're getting at. So like the long-term charts, we've got to flush out. And does it look like the dollar trend is going to stick around? Well, we need to see some key fundamentals. And we do have US non-farm payroll numbers coming out on Friday, right? This isn't like the CPI that's going to really determine what the central bank does, but it is a head kicker. It's not far behind inflation as far as important, because if employment, let me just explain this part. If employment or unemployment increases, right? Less people have got jobs. That immediately impacts sort of retail sales. People have got less to spend, less retail sales. Manufacturing gets hit, right? And then it just goes through the chain of the economy, right? And it may take a month or two, but then it starts to sort of really clamber down. right? So that's when they would start to look to cut rates. Inflation, if no one's spending, retail sales are weaker, manufacturing is weaker, well, then inflation's going to be weaker. That's the process, but it's not instantaneous, right? If the numbers are stronger, well, it confirms immediately. There's nothing to really stop things at this point from the dollar going up. Okay, so that is the thing. And you're like, well, hell, I better get a grip on things. But understand the non farm payrolls, okay, it's like I keep telling my kids hot chips are not your friends, right? They are over processed, full of oil and everything else, great snack, but that's about it. Same with the non-farm payrolls. It's almost like a novelty event for the market, right? The bankers, we sit there and watch the numbers and you're like, wow, this is absolutely crazy. It's like sport, watching the market, it's a bit of a bloodbath. The problem is, as I've just got the details up here, you come through and you have a look at the non-farm payrolls. You've got a whole bunch of numbers, right? This is the problem. Now, the key number is the non-farm payrolls, and then you come down to the unemployment rate, right? They're the two key ones. But as you can see with these labor numbers, labor force numbers, there's at least six that are really can knock you around. So to trade it is difficult, to say the least. Now, the dominant influential traders who love a bit of risk and love getting involved will get in there, right? Liquidity will disappear. With no trend lines around, you can be sure that the banks will be conservative with their liquidity. That makes trading the event hard. So back to where I started, like, what are we looking for? We're trying to work out, right, if the dollar's going up or down. And if I come back to the live signals here, right, and this is what happens. And you've got to use the signals as a two-part thing. Try and find the best trade to hit, and it will tell you how are the market conditions. Like if everything is lit up and uncertain, that's telling you stand back, let the market just do its thing. There's no clear opportunity there across most of the instruments. That's what it's telling you. Okay. So if you do come back to the live signals, always scroll down. If you see the dominant, well, you'll see very clearly because there won't be many pairs at the top here that are showing us signals, right? If the predominantly, I should say, the market analysis is uncertain, that's telling you market trading conditions are not good, right? For me, stable or compliant traders, you like a system, a process. I like the ducks lining up. I like it nice and easy. That's what I'm looking for. We don't have that right now. So stand back and let it happen. The dominant traders, I've seen what's going on there. These guys are active, but it's high risk, right? There's some good trades going through and there's some pretty average ones as well. But you know what? That's what they thrive on. That's what they live for. And you know what? On a diversified trading team, you have a couple of 2 or 3 dominant traders, and you probably have more about 10 stable compliant traders to sort of level things out, right? If the dominant traders are losing, the other guys pick up the slack and vice versa. So keep an eye on the crosses at the moment. The major currency pairs, right, with all the current market activity, it's no surprise that they are uncertain, right? Because if I come back and look at the charts and yeah, I've got trend lines here, right? That just tells us where the potential market is going, right? The other thing that you can be doing, let me just get up sterling, is, okay, so almost say from the start of the year, okay, looking at the 13th of January, one thing that you can do, and this is where Leonard, you'd be coming into play here, looking at the Fibonacci's, right? You can go from this point here up to the high. Now, it's just a cross section of what's happened now, and this gives you potential levels or targets where sterling could be heading. Okay, you've got Fibonacci levels here, 38.2. If I just, and you can see there, it's a bit hard to see, 131.42. Okay, 100 points lower. The 50% retracement, 129.42. The 61.8 used to be the sort of big one in the day, 127.43. So these are potential support levels, or call them pivot levels if you want. As we go through the next couple of days, these are the targets. And if you're looking at levels to get in, okay, we've got our resistance trend line. You could be looking at these Fibonacci retracements, the 23.6, to get into the short trade. But This is where, and now I can sort of come in, right? This is why technical analysis is such a talking point because you can make your charts do anything. All we want to know as a trader is this thing going up or down, right? Right now, you've got to say and be objective. Euros going down, sterling's going down. Well, Aussie and Kiwi, I'm just going to leave those on the bench, as is dollar yen. I'll leave that out as well. The other pairs have got some things going on here now. Yeah, like dollar Swiss is going up. It is topping out, so as is euro and sterling on these big sell-offs. So we need just a little bit of clarity. It's a shame we don't have US CPI numbers coming out. You come back to your hourly charts, you can see very active the places where to get in, where to get out, where the pressure points are. Okay, so the hourly charts are looking nice because they are all uniform, right? What I mean by that is the dollar's going up nicely against everything, and that's the sentiment in the market, right? So that's where the non-farm payrolls could come in. It could knock that sentiment out. If we get weak US numbers, it could get a little bit tricky, right? We get strong US numbers, it's going to be pretty loose because the one thing that we're missing on the downside on euro, sterling, Aussie, Kiwi, and even the top side, Swissy, the yen, and even dollar CAD, we are missing entry levels. And what I mean by that is nice liquidity hubs. And that's what the trend lines are. So there's no levels on the top side. Makes it super slippery. And that's why liquidity on Friday for the non-farm payrolls is going to be as loose as a goose because there's no levels, right? The banks know that. So they pull their liquidity out. So what's our best outcome? Well, to me, I think the best is weaker US numbers. We'll get all these opportunities to get in, right? If we get weak US numbers and they're like, say, significant weak, not just like a fraction, we're going to get clean retracement moves back up on a lot of these pairs, right? And then you're just looking for the ones with the best setups. Euro will come back into flavor. I mean, there's levels here, and that's what the trend lines do for us is give us liquidity so we can see exactly where we could potentially be getting in. If we get weak US numbers, you're looking to sell dollars and we've got levels all over the place, right? So just keep an eye on it. The next day or so is going to be interesting. And most importantly, do not get frustrated, right? I know there's a couple of new guys sort of join us. I think, oh, there's not much going on today. Well, what's happening? I haven't seen too much on the signals. No, that's because the signals, they are trend orientated, but they are there to isolate the best trades, right? Not just a trade or not just to get into a short-term move. And as I said, with the market analysis, if you see the majority of instruments like this, okay, you probably just sort of have a quick look at your chart, see what's going on, but walk away, right? There's nothing to be gained from trying to hit instruments that are uncertain, especially around sort of news events, right? You're trading a higher risk market, and that's not conducive to building capital. All right, so that's where we are at the moment. It's I think the like things that do make sense to me, selling Aussie against the crosses. Okay, we had weaker inflation numbers yesterday in Australia. Didn't really move much. Market's sort of like confused with this dollar move, but now that should become a bit more apparent. So up here, buying sterling Aussie, selling Aussie CAD, Aussie Kiwi, makes a bit of sense. Just wait for the signals, right? This is trading long term. It's about patience, right? Identify what's happening. Don't get caught up in the noise, which is the hourly charts and what's happening there. And if you look at the news, you can see a whole bunch of usually crazy stuff. Jerome Powell doing his best there to keep Trump at bay. And that's pretty much it. Spend some time, get your charts up to speed, and then you'll be able to identify which pairs are good to be trading or going to be good, which ones are not so good. And then we can actually, it makes trading easier, right? Because you know exactly what you're doing. The other key thing to do, and I've just been talking about the majors, right? If you see an instrument, right, this is what I was sort of just saying there with like the Aussie, with the Aussie retail, Aussie inflation numbers yesterday. And we do have Aussie retail sales figures out actually in a small handful of minutes. I'll be having a quick look at that. That confirms that potentially an interest rate cut's coming. All we need is one of these major currencies like euro, sterling, Aussie, Kiwi, Swiss, which is rarely the Swiss or the yen, except for a safe haven. The CAD, if the CAD, Aussie, euro, sterling, Kiwi get clear direction, we're on the crosses, right? And you'll see the live signals light up like a Christmas tree when these live signals, when one of these instruments, whether it's euro, sterling, Aussie, as I said, Kiwi or CAD, if we get clear direction on one of those currencies, we're on like Donkey Kong across the crosses relative to that instrument. All right, so take it easy, relax. This is a good flush out. You don't need to be making rash decisions at this point. All right, guys. If that brings up any questions, just jump on the Discord and we can run through it. All right, guys. Have a good one. All the best. Cheerio.